Hello and welcome to Crypto Weeklies. In this video, we compare the current Bitcoin bear market, the one in 2026 with the one in 2022. None of the content financial advice. Right now, the price of Bitcoin is trending upwards. Again, you can see that from late March 2026, when the ROI for Bitcoin for the year 2026 was negative 25%. Now it's at around negative 11%. At one point in early February 2026, then ROI is close to 30%. So now the price, let's check the price of BTC. It's currently at around 78, 79K, hovering in that range. If you go by the daily or the weekly candles, you can see that at one point the candle wick was close enough to 80K. But that's a kind of a precarious area as this 20-week simple moving average, the red line over here, it's like more likely than not going to act as a resistance in the short to mid term. So this is the red line which is coming in at around $77,000. The price is almost one and a half thousand higher than that 20-week simple moving average. If you compare that with the last bear market, that is in 2022. There were a couple of weeks where the price action stayed above the red line, but then eventually in the bear market year, the price subsides below the red line, and the red line continues to act as a resistance. That's the 20-week simple moving average. The price has rallied from that 60K to 80K, and we made several videos on the channel back then when the price was at around 60K that the price action has a likelihood to go to 80K. This is the homepage of my website, cryptoweeklies.com. From here you can check out the YouTube videos posted on this channel by clicking over here. And if you enter Bitcoin $80,000, we had made a lot of predictions pertaining to this price action over here a month ago, almost when the price action was closer to 60-65K. And now that the price action has gone close enough to 80K, now it makes more sense to now to pivot to back to that view where the likelihood of the price action going forward is down with that 20-week simple moving average. Depending on the slope of the 20-week simple moving average, the price action could stay in that territory. So if you can see the angle of descent for the 20-week simple moving average is now kind of having that U shape or the bottom shape over here. Let's say if the bottom for 20-week occurs, let's say somewhere close to 70K, and then from the last bear market you can see that over here the bottom for 20-week simple moving average was at around $18,000, whereas the price floor was $15,000. So that's something to look out for in the future. Right now, if we compare this bear market with the last bear market, you can do the comparison using the ROI indicator on the Crypto Weeklies website. This is my website, and it gets updated every single day. You don't require any sign-ups or anything. It's all for free. Under the ROI section, if you go over here, these are all years. Now let's focus on 2026. This is the ROI since the yearly open for Bitcoin, and then comparing that with 2022, which was again a bear market year, and again we can do that with 2018 as well, which was another bear market year. So 2026 over here, this purple line is right now at a better position at a similar time in the year compared to 2022 or in 2018, where the ROI was negative 28%, and in 2022 the ROI was negative 16% or so. Right now in 2026 the ROI is negative 11%. So what typically can we derive or analyze or correlate across these bear markets is that after that initial yearly open sometime in January, there is one major rally like there was in 2018, where the price almost went positive 30%. In 2022 there was one area where the price went almost neutral to negative 0.46%. In 2026, this time, that area already behind us, similar to 2018. In January, mid-January 2026, the ROI was positive 8%, and then following that there was one sharp drop again. I will get rid of 2022 for now to help you understand the similarities. Then a sharp drop in February, negative 50% in 2018. In 2026, due to diminished volatility to the downside, negative 30%. Now after that, in March, there was one double bottom over here, slightly higher low for Bitcoin with negative 25% instead of negative 29%. So whereas back then there was a double bottom in 2018, then a similar counter trend rally, taking the Bitcoin price action closer to that zero or positive territory or less negative territory. And then in somewhere in May, not just in 2018 but also in 2022, you would see that after the price action stays elevated over here, there is one sharper drop in May, and then again in May-June time period, that summer drop, which is again kind of like a penultimate drop, and then the price action starting that summer time period stays almost sideways. Again, comparing the last two bear markets over here, 2022 and 2018, almost says sideways from mid-June to October-November time period in the bear market year. So the entire 3 months period of summer, and then almost half of the Q4. So entirety of Q3 and half of Q4 is largely flat for Bitcoin. Before that, a penultimate drop. Again, this time around, the percentage might be different as Bitcoin becomes less and less volatile to both the upside and the downside. But if we go by just one of that bear market, let's focus on 2022, because that would be the least volatile compared to 2018, where the drops for the ROI for the yearly price action for Bitcoin was negative 76%. In 2022, it was negative 65% or so. This time around, it could be negative, less than negative 50% for 2026. So as the drops in the bearish months were less severe for Bitcoin, let's say this time around, instead of dropping 50 to 60% in May-June time period, what if the drops are closer to 30% over here? 30% from the yearly open for Bitcoin would be close enough to that area in February 2026, the early February 2026 drop, which was close to about 60k level, a 35% drop. So the yearly open for Bitcoin was over here. You can check using this price chart over here, the negative 30% from that yearly open in the week of Jan 5. So was that was close to that February bottom in 32%. Let's say if the next time the bottom for Bitcoin in May is close enough to that 30%, or in the worst case closer to 35%, the price of Bitcoin in that area could be 57k. What becomes more of a logical target is this white line over here, which was the 2024 support, following that rally in early 2024, that breakout in January to February 2024. After that major rally, this area of support was this white line over here, which held as a support from July 2024 all the way to about September. If that area gets tested again, then the drop for Bitcoin could be close to 40%. And again, we know that from the last two bear markets, 2018 and 2022, that at that time between May-June, mid-June area for Bitcoin, the drops tend to be closer to 50 to 60%. So in 2022, the drop was 60%. In 2018, the drop was 56%. Maybe this time around, the drop is 45%. just doing a correlation between 40 and 45% from the yearly open, that takes the price action close to this white line. And the worst case scenario for Bitcoin, if the drop from the yearly open is 50%, which was this area where the price action faced some resistance in January 2024, that could be the worst case scenario for Bitcoin for this year, close to that 45k, where from the yearly open the drop is roughly speaking 50%. With that, using these kind of analysis in tandem with the time weighted average price based analysis, which we would like to focus more on this channel, is to identify when the price action could be in the lower risk level. Right now it's at around risk level 7. You can see over here price action has stayed in this elevated risk level for quite a bit of a time, like it did in 2018. Over here prolonged time in 2022, slightly less time, but again this time around we are following 2018-2019 time period more than the 2022 bear market. So this meaningful presence in this elevated risk level, whenever this area or this elevated risk gives way to lower risk levels such as risk level 5 or less, this could again be one of those time periods in Bitcoin's price history where the risk levels are significantly low to justify some DC, again not financial advice, dollar cost average at these lower risk levels, using this time weighted average price model, which is again a gravity of time based approach, where to identify where the asset, that is Bitcoin, has spent its entirety of its life, not just looking at one simple moving average, but also looking at in relationship with historical price action, and where the asset has spent less time, and through the gravity of time, what could be the price which could be digested really well in the bear market. So that hasn't happened for Bitcoin yet in 2026, and again this makes sense with respect to the yearly ROI as well. With that, hope you enjoyed the content. If you did, please give a like and subscribe, and hope to see you again tomorrow. Thank you and have a nice day.